Hello everyone, hope you're doing well. Welcome back to the Road to Retiring channel. Today we're going to revisit the PDD Holdings stock, which we did a video on a couple days ago, as they have now released their earnings report and things have changed quite a lot. If you enjoy this kind of content, please do drop the video a like, subscribe, and let me know in the comments down below any other stocks that you're interested in. So looking at our ultimate stock valuation spreadsheet that we used on a couple days ago, you could see that our average fair value is $75.28. Now that's quite close to current levels, but our now new fair value following the earnings report has changed quite a bit. If we look at Pinduoduo, you can see this has fallen by 14.17% since that earnings report came out, though it is up 2% in pre-market, so it might be about to bounce back a little bit. But going over this current market price and why it has fallen, this was down to a variety of factors. Firstly, profit margins have fallen. Despite their revenue increasing, their net income actually fell and their profit margins are now down from 29.82% to 23.74% this quarter, with Pinduoduo saying that costs are rising, which have impacted this. Now this isn't something investors want to see, as they want to know that the earnings are going to be maximized. And on top of this, if we look at their quarterly reports for earnings quarterly, you can see they reported $1.21 earnings per share in quarter 4 of 2022, which was an underperformance of 1 cent per share. However, what's really worrying about this is not the 1 cent miss, it's the fact they missed, because if you look historically, quarter 3 of 2022, quarter 2 of 2022, quarter 1 of 2022, and even further back, if you look at all of these quarters, you can see the estimate is so far below what they reported. The estimate was 0.68, they reported $1.21. The estimate was 0.44 in quarter 2 of 2022, they reported $1.13. Estimate 0.29, they reported 0.47. You can see they're massively overperforming estimates historically, and then bang, quarter 4 of 2022, they've underperformed the estimate. So this was quite alarming to a lot of investors, as they were expecting them to keep overperforming. On top of this, they also underperformed in revenue, missing by about 250 million. So these were quite alarming signs to investors, and on top of this poor earnings report, they've had some bad news in the news. So you can see that Google suspended China's Pinduoduo app on security concerns. They've suspended the Play version after malware issues were found on versions of the Chinese e-commerce app. Now, they said Google Play has informed them that the Pinduoduo app has been temporarily suspended as the current version is not compliant with Google's policy. And they're saying that this has happened to several other apps in the past, and there are multiple reasons this can happen. And they keep saying temporarily, so I'm sure they're expecting to be back on the App Store soon. But being taken down from Google's App Store on top of the bad earnings report really compiled a lot of things for investors, and they weren't too confident with this anymore. Now lastly, analyst estimates. Now, in terms of earnings, these have changed a lot, and not in a good way. So if we look at the financials and earnings annually, you can see that continued growth into 2025 is still there, but now in 2026 this is expected to fall into $5.64, which is a big change from previous expectations of continuous growth. And as you can see, this is very different to sales. Sales are expected to continue rising the whole way through. Because of this, we're getting very different fair values based on price over earnings compared to price over sales. Previously, on this video, you can see the analyst 5-year estimate was 66% annual growth, which is crazy, but that was including this jump from 2021 to 2022, which was quite significant. However, now that 5-year estimate has fallen to 9.69%, a big drop, and we've accounted for this here. So as I said, the price of earnings versus the price of the sales is very different. We've put in that earnings estimate of 9.69%. The realistic growth rate still sits at 40, so I think it's more than comfortable, very achievable that they can do this 9.69%, and I wouldn't be surprised to see them overperform this by quite a bit. Now, we've gone for the EPS of 2022, and we put price of earnings multiple somewhat in line with the sector median for the price of earnings. You can see it's 14.85. We may even be able to increase this slightly. I've gone for 14. I could increase this to that sector median level at 14.85, and that would then make the fair value slightly higher, but you can see this has dropped drastically to levels at $46.52 compared to previous levels around 70. You can see the fair value here was $75.28, with the fair value for price to earnings being $69.61. So that's fallen by quite a bit. Obviously, not in a way that people want to see if you are an investor, and that's why the price has dropped by 14%, very significantly on the day. Now, in terms of 2027 price, this is still above the current price, but barely in terms of price to earnings. As I said, the price to sales are where things are actually still pretty good. If you look at price to sales fair value, you can see that they're expecting 19.5% revenue growth from current levels to 2026 at 38 billion. That's what they're doing, 18 billion in 2022, basically 19 billion, up to 38 billion in 2026. But keeping that 19.5% revenue growth, the same price to sales multiple where it looked pretty comfortable for Pinduoduo at 5, that gives a fair value of $78.70 with a 2027 price of $154.86. Obviously completely different to the price of the earnings fair value calculation, and that is because, as you can see, there's just massive drop in profit margins expected in 2026, which has just put off investors completely. So it's very difficult to gauge where this one's going to fall and sit, and I very much suggest keeping an eye on these earnings estimates, as I would expect them to continue changing quite a lot as the earnings report has only just come out. We're probably going to see more and more analysts inputting into this over the coming days, and these could easily update and price of earnings rise again, so definitely keep an eye on this. Now, in terms of price of operating cash flow, this is very much usually in line with earnings. You can see we have the 10% growth rate to keep that operational cash flow just above the net income, because you have operational cash flow is made up of that net income, but then you also have to include things like depreciation and amortization. So it's usually pretty much in line with price to earnings, just a little bit above this. So this is going to paint a similar picture to the price to earnings, giving a fair value of $51.46 with a 2027 price of $101.26. So very similar to the fair values expected in earnings, and when you take the average of these, it's nowhere near as good as it was in terms of the fair value. This has fallen a lot, and now I'd be looking to see another significant drop. Based on the current 2027 predictions, it's not terrible. There's an 8% return average if you take the average of these prices, but is an 8% return worth it for an individual stock with quite a lot of risk involved in terms of bad news at the moment? Probably not for myself personally, and that's why I'd like to see it drop a lot more before I intend on adding it to a position. But I definitely think it's worth keeping an eye on these price to earnings, because, as I say, this is quite strange that you'd see the price to earnings drop in 2026 with the price to sales continuing to rise. So it may be the case that the price to sales gets updated and sales are expected to fall in 2026 as well as earnings. But I definitely will keep an eye on this, see how the analysts keep changing these values. But for now, based on current expectations, this isn't one that I would like to go near at the moment. Let me know what your thoughts are, if you do own any of Pinduoduo, or if you were considering it, and if this has now changed after the earnings report. I'd be very interested to hear. If you enjoyed the video, please drop it a like, subscribe, and I'll catch you in the next one. Bye guys.